things got too cheap. Many stocks just went too low or turned out to be too low versus the numbers they ended up reporting. And that's why I wouldn't be surprised if we've got more room to run, even as the market took a breather today. Dow dipping 57 points, S&P declining 0.20%, NASDAQ inching down 0.07. We're overbought, and we can expect some profit taking. Sell. There's been a lot of money made very soon. A breather's warranted. Often when we've had big runs like the one over the last 4 weeks, it's because, though, something actually has changed beyond sentiment. Now, look, you can always have too much negativity and get a snapback rally. But that is not what's happening here, people. We're dealing with a market that was too punished versus the actual fundamentals, and it's worth examining how that happens. I think it holds the key to the next phase of the rally. First, I don't want to minimize the fact that interest rates sure look like they peaked in late October, and the Fed might be done tightening. We're doing a week-long series on what works if rates have truly peaked. And if the recent action of the bond market reverses itself, well, it's true. They'll move this. Let's say it becomes suspect. But if you take interest rates out of it, you simply cannot have such a powerful move as we've just had without something changing in the real world with individual companies' prospects, not just in the animal spirits of the market. So let's go over the things that mattered and the things that changed for the better. Why don't we start with Exhibit A, the $1.1 trillion company that is NVIDIA. CEO Jensen Huang worked for 20 years to develop graphics cards that could be used to generate thoughts, to actually think for you. For a couple of years, even as it amazed those who saw it, like we did, the technology, it went begging. And then a year ago, we found out about this ChatGPT from OpenAI. Jensen worked with Sam Altman from OpenAI for years. He was ready. He had the supply of chips. He had the ability to make more almost endlessly, and he could sell them for big prices. Last year at this time, we thought NVIDIA would earn around $4 per share in 2023. Instead, thanks to the power of AI and the demand for all of those chips, do you know they're going to earn maybe $12 per share? While stocks can go up because people are willing to pay more for the same earnings, that's what we call multiple expansion. We prefer when they go up because the earnings turn out to be much better than expected. NVIDIA is experiencing both kinds of rallies, but mostly it's about the huge numbers.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.